This is the J Pitt Show.
Do you think investors that flip homes versus investors that look to buy rentals, who's going to be able to find the most deals in Louisville next year, 2026? So you think flippers are going to have a better opportunity or rental investors?
I think I'm probably going to say, and this is much to my dismay, but I'm going to say flippers.
Yeah.
I'm going to say flippers because I see trending, even if the Fed slows down, I think rates will continue. We haven't seen a ton of rate drop behind the Fed rate decreases. A lot of it was trending that direction before the rate drops. The rate drops, the mortgage rate decrease that we have seen, it was trending that direction before the Fed actually reduced the funds rate. And I think it will continue to slowly taper for the same reasons. I think we see the Fed has come out and said now one rate drop for 26. I think it'll be more. I think those are performative statements. But I do think that we won't see any rate drops in Q1.
Yeah.
And I think you will see an active and healthy Q1 real estate market. I think inventory is still very short. They are finally starting to acknowledge it as the primary concern with the real estate, with the housing market. You know, if you look at, and I've said this on this show before, I'm concerned and interested in the economy. And the best place I feel to get information surrounding the economy is from politics. Okay. So if you look at, obviously we have a Republican House, a Republican Senate, and Republican presidency right now, albeit very slim majorities, right? So they can't still accomplish a whole lot in Congress. And you're seeing the Democrats take some off-year elections, special election races in even areas that the Republicans performed well at the last election cycle. So as politics always does, it's already, the writing's on the wall that the pendulum is about to swing. Midterms almost always go to the party out of power, right? And, you know, end of 26, you have midterm elections for Congress. The Democrats will likely take the House by a fair majority, 10 to 15 seats potentially. Pretty solid swing. As the majority of the purple states kind of go blue. The Senate could stay, I think, and probably will stay Republican majority, based on what it looks like. But the message that you're hearing, Ryan, that seems to resonate is affordability. Now, it's kind of silly, to be honest, which most politics is, because affordability, not inflation. Inflation is not an issue because inflation is relatively low. But affordability, which the majority of the affordability challenge came as a result of the last administration's inflation. So it's funny that it's a winning message, but it is. Okay. So what you're now seeing is the federal government start to acknowledge affordability, but prices aren't going to go in reverse, right? So rates should come down a little bit to offset that, but demand still exceeds supply. Did you see Jerome Powell's comments about the housing market? There's kind of a viral clip of, it starts with like, the housing industry, the housing market in general has some significant headwinds, some significant challenges ahead of it. That's how he starts it. And then he goes on to talk about affordability, but he talks about supply and demand, which is what we've been screaming all along.
Yeah.
Right? And I still see no plan to stimulate supply. I wish I did. But, it's not building houses on federal lands like we talked about a couple of episodes back. But I for that reason, long roundabout answer for you, flippers are going to do better because prices are going to run.
Well, and honestly, I see builders slowing down right now, just in the markets I'm in, and whether it's a national home builder or local home builders, it's prices to build haven't gone down.
No.
And
prices don't go down.
And I would say new construction home costs haven't really gone up a ton.
No.
As compared to 3 years ago, and prices are the same.
Yeah.
So it's I think going to get worse
So, okay, prices of what? Prices of materials?
Materials are just as expensive as they were. Labor is just as expensive as it was.
It's not more, but it's not less.
Right. Yeah.
Well, and that's the thing, guys. Prices don't go down. Like, they don't. I mean, name an industry where televisions? Televisions probably. Yeah. Like, technology, some tech, commoditized tech.
Computers.
I mean, but Apple products don't go down.
Yeah.
They go up.
Yeah, not much, but they've started doing more price increases lately. But we talked about on an episode a long time ago, Apple's first iPhone, I can't remember how much it costs, but it really wasn't that much cheaper than what they cost now.
Adjusted for inflation.
Because they priced for 10 years out. I forget what the pricing method is. Yeah. But they went ahead and just said, we're going to make this the price and kind of keep it here for a long time or close to it for a long time.
Yeah.
And now you're seeing them have to raise their prices, whether that be labor costs or tariffs or
probably
or whatever
all of the above.
But I think I'm in agreement with you that flippers will have more deals out there for them. I think.
I mean, I'm more in a rental buying mindset personally the last several years.
Yeah.
Acquiring assets to fight inflation, to protect against, the devaluation of the dollar. But prices are going to run.
Yeah, I think the issues some rental investors might be running into is home prices are increasing. Rents aren't really increasing a ton.
Well, I don't know.
They are.
I don't know.
I don't think they're increasing with the appreciation.
Man, I don't know. I've seen some crazy rents.
Yeah.
I've seen some crazy rents, but it's the soft costs that have gotten crazy on rent. Like I can charge, Ryan, I'm not kidding you. You can just look at the Section 8. Section 8 housing, okay? That it's a good way to consider what rents are doing, to look at how those allowances change from year to year. Okay, so what I'm going to tell you is that I can get, including an allowance for utilities, which is included in the Section 8 voucher, for a 40214 2-bedroom, 1-bath house, you can get like $1,300, Ryan. So if you figure a 2-bedroom house, $1,298. I knew it was 13. I just wanted to verify. 40215, 40214, 2-bedroom frame house, 1-bath. Okay, less than 1,000 square feet. Okay, no basement, no garage. $1,300. If you say $200, that puts you, for utilities, that puts you at $1,100 a month per rent for that. I had the place listed or leased at $950 based on the last time we rented this place.
Yeah.
Like, it's kind of crazy. I was talking to somebody else the other day, an agent here in the brokerage that has renovated 2-bedroom units across the street from the baseball stadium on 3rd Street.
Yeah.
Okay, over by U of L's campus. They get $1,250 a month in rent for an apartment.
Wow.
Now it's nicely renovated.
Yeah.
Okay, but it's an apartment, $1,250 a month. I mean, this is kind of crazy, man. I don't know. Rents have crept. They've crept, and I don't know when it happened because it seemed like it was all of the sudden. But then I look back, and it seems like it's been that way for a year or two. And I don't know if I just didn't have any vacancy, so I wasn't like paying super close attention to these areas. But there's a lot of rentals in that area, in those areas. And I'm going to tell you, some of the East End zip codes on, like a 3-bedroom East End is like close to $2,000 a month.
Yeah.
So
maybe I'm just thinking
I don't know.
more like Hardin County market, but that's a whole
But
new
the
discussion
soft costs,
for another day.
That's what I said. Soft costs are kind of crazy because your turnover, your damage, tenants don't seem to take quite as good a care of property as they used to.
Yeah.
And care a little less about paying.